we are talking about the drivers of return, ensuring long-term profitability. So I want to introduce to you, we have Halé Behzadi here with BMO, and we also have Lisa Salvi with Charles Schwab. Lisa and Lisa, I think it's a first. There's the cult jam.
Need one more.
One more. So we have a good mix here because, Halé, you were on the investing side, and Lisa, you're on kind of the business consulting side. So a good mix here. Halé, I want to start with you. So you help coordinate 4 lines of business at BMO. So give the audience a little bit of an understanding of who your clients are and how you're working with them.
Great. Thank you so much. So yes, my background is wealth management, private banking, and investments. But today at BMO, I oversee, and my mandate is bringing together our 4 lines of businesses in California as the vice chair for the state. Our 4 lines are the personal and business banking, commercial banking, wealth management, and capital markets. So principally at heart, BMO is a community bank. For those of you who are Northern California based, you might remember Bank of the West. BMO bought Bank of the West not more than a couple years ago, developed a much larger footprint in the state as a result of that acquisition. However, we have been in California and in Northern California since 1864, but very small presence. So principally our clients are business owners, and for those business owners and the commercial bank being the engine of the bank, we bring together the power of the entire banking platform to bear for them using our wealth management, our personal banking, as well as our capital markets capabilities. So that's sort of the broad overview.
In a nutshell.
In a nutshell. Lots more to say on that.
Now, Lisa, who are your clients? How are you advising them? What areas do you cover?
Yeah, so everyone's familiar with Charles Schwab. We have about $10 trillion in assets under management as of the first quarter. You see the Charles Schwab branches everywhere. That's not my part of the business. I'm with Advisor Services, so we advise 15,000 independent RIAs. So they're running their own businesses. They're across the country. They have their own brand. They have their own identity. My team gets to do something that we really love. We have a lot of passion around what we do. We work with them on their business strategies. So we help them with their setting up their business if they're new to the platform. We help them with their growth strategies, their talent strategies, succession, technology, operations, cybersecurity. And often I'm in rooms like this and I know half the people because we have long-standing business relationships with them as they grow their businesses with us.
Excellent. So let's get into some of the issues around, we have tariffs, we have geopolitical issues. So Halé, if you can explain what's the mood of your clients, how are you advising them during this time?
Our clients, as you would imagine, are not a monolith, right? And they have different perspectives. Some are very sanguine on tariffs and are thinking that it is going to blow over, and others, however, are much more concerned. So depending on the type of business that they're in, I think for us, the main thing is to start with planning with our clients and making sure that they all have the right plans in place, the right asset allocation in place, so that they have future-proofed themselves and inoculated themselves against shocks, whether geopolitical or economic. So we make sure that their portfolios are well diversified, and that they are, today, for instance, we see that because of the Magnificent Seven and other, the large cap growth sector has definitely, we see an outsized portion of their portfolios in large cap stocks. So we see that as a hidden risk for them and make sure that we're advising them to diversify and look at other sectors as well.
Has the long-term strategy shifted at all?
Long-term strategy stays very much the same in terms of staying invested, making sure that you're not timing the market, you're not jumping in and out, because if you miss the good day, you miss the good days and the run up, you have an emotional reaction to the market. You're out of the market. Then on a good day where the market runs up again, you've missed the return of the market. So staying invested, the long-term strategy stays the same. We're advising clients to look more. My investment folks tell me that we're advising clients to look more in the small and mid-cap space, and looking at different sectors that might be a complement to what their concerns are in the market. But every client also has different views. I was just with a client earlier today who saw the shocks in the market around tariffs and went full on. And then you have other clients who are, nope, keep me out. I don't want to invest any further right now. I'd like to stay. And for us, it's understanding our clients, understanding their needs, their risk tolerance, their time horizon, and advising them accordingly. So it's not a one-size-fits-all.
Okay, and how are you advising your clients, Lisa, when it comes to, like, we'll get to specifics, tech and workflow?
Yeah, so as firms are beginning, they always want to talk about tech, right? So there's just this absolute proliferation of fintech providers. So that creates a wonderful amount of choice, but also maybe too much choice if you're going to stitch together your tech stack. So today, what I would say is look at your existing tech stack. Are you optimizing it? Have you turned on all the available APIs? We have a ton as a custodian, and often people are not even taking advantage of the ones that they're already paying for with their current tech stack. 2, how are your workflows? So we do a lot of consulting around workflow design, making sure that you are understanding how things are flowing through your business. Often advisory firms, registered investment advisors are growing so rapidly. It's one of the fastest growing parts of financial services. You grow and not all of your systems and your workflows grow at the right pace. So are you designing those, and have you revisited them with both the client experience and the operational experience in mind, and are those working together? And then 3, one of my consultants who I'll quote likes to say, people always invest 98% in the tech and 2% in the training. And if they flipped that around, they would have a much better outcome, which I think there's actually some truth to that. So that's kind of now. What are you doing today with what you have today? 2, a trend we're watching is some people are starting to think, do I really want the best of breed for each piece of tech that I have in my business? Is that still how I want to invest my dollar? Or do I want to start to kind of simplify my tech stack, knowing that there's more AI capabilities coming along, and maybe if they're all working together, that's going to advantage me in the future? Those who are not of that mindset yet like the bargaining power of renegotiating a contract and not being beholden to one company in their business. And then the third thing I would say is we're really trying to get advisory firms to start thinking about their data and data governance the same way we're talking about today. That is the kind of ground floor level of AI capabilities. A lot of firms are starting to use those AI capabilities, mostly so far for productivity, like note-taking capabilities. And they're looking for really simple things like just being able to pull that into their CRM effectively. So those are some of the current ways we're seeing that play out. And I'll just throw in one quick thing. I won't scare us all with cybersecurity, but it is very important.
Like you have to.
A reality of doing business in the modern world today.
Now, since we're talking tech and all that, there is a question from the audience. Halé, I want to bring this to you, and thank you for who submitted this. How fast will AI change the financial services business? So talk about maybe some of the changes you're seeing, or some of the advantages, maybe some of the challenges with it as well.
Thank you for asking that. So at BMO, we are a digital-first bank. So we've been using AI for a number of years, really mostly to unlock and turn data into actionable insights and to predict customer behavior, customer preferences. So I'm sure that, those of you who work with us and other organizations see this in the way that we recommend ideas to you. However, I think generally speaking, also on the back end, we have to look at AI through the lens of machine learning as well as natural language processing and incorporate that into, as you said, workflows and make it easier for our people to be more productive. As you can imagine, banks are highly regulated organizations. It's not something that you can turn the switch and unleash. So we have to continue to be very responsible. But we have a chief data officer, an AI specialist in DC. She is incredibly capable and advising our AI strategy on a regular basis, and very connected to government and regulations and helping us implement so that we can do better for our clients over time. Because the point of it would be to unlock value for our clients.
And I'll ask a question to you, Lisa, from the audience too. What have been the biggest challenges you've seen related to the integration of AI and big data more broadly, and maybe some underexplored opportunities? I mean, I'm not too sure.
Yeah, I mean, I'll answer that in a couple ways. Like first, within Charles Schwab, one of our projects with generative AI is we introduced an overlay to our knowledge management system. So our service professionals now, when they're on the phone or answering questions, they can use this knowledge assistant to help search and serve up answers. So that's taking the exact same database of information and just putting an overlay that they can interact with. And the satisfaction rate of those professionals is skyrocketing, right? Same data served up in a different way. So that is one of the ways we have moved on it within Charles Schwab. I agree with you completely. This is not an area where you want to be on the bleeding edge of innovation. You want to be very careful and really understand implications completely, because this is a trust business and we want to protect trust at all costs. I would also say some of the companies that are talking about their AI usage and shouting it from the rooftops, I would assume all AI we're using right now is the worst version of AI, and it's going to continue to get better. And sometimes you're paying very high license fees for not the greatest version. That's going to be maybe not the greatest bet in the very near future. When I look at the advisors and the way they're implementing it, like I said, it's mostly in productivity areas and marketing content and generation. I will say I have seen some firms, so we work with firms that are, under $100 million in assets under management to hundreds of billions of dollars in assets under management. So really across the entire spectrum and complexity. You probably know there's a ton of M&A in our space. There is a lot of PE money coming into our space. So you see it all. You see all sorts of different models. So enterprise firms really all the way down to businesses that by design want to remain small. You see a lot of different levels. I have seen some firms that have become agentic in very small ways. They've created their own agents. That is not the norm, but it is pretty remarkable what you can do. And when you are maybe a smaller business, you can implement things a little bit easier. Without getting into which AI we should choose, because that's not an area I want to play with, getting advisors together in groups, like even just roundtables. I was actually reading a thank you note for one we had earlier in the week, and just getting them to share ideas. You'd be surprised with what is currently available, different ideas that come out of that. And it's not necessarily really expensive ideas, but it's really meaningful little things that they can implement in their business today. And the note I was just reading, it was like, I walked away with 5 ideas from other advisors of things I never would have thought of putting into my business. So I think having those forums and those ideas and sharing those is going to be a really important part of the future as we think of, okay, well, how are we going to implement these things into our businesses?
Yeah, because there's so many ways to go.
Millions, right? Yeah. Where do you focus first?
Halé, I want to bring it up to you. As far as your clients, what are some of the pitfalls that they're falling into, and what can you say as far as risks?
I think it depends if you're a client on the commercial banking side or on the wealth side or both. I think cybersecurity, you brought that up, that is a big issue for all of our clients because the rate of hacking has just increased tremendously. And so providing, exactly as you said, Lisa, providing that forum for education for clients We have a fusion center at BMO, ensuring that the head of the fusion center talks to our clients on a regular basis, educates them on how to protect themselves against hacks is critical. And as far as the investing side is concerned, of course, this, the cybersecurity applies to our consumer banking clients, to our wealth management clients, to all of our clients. But on the wealth management side, on the investing side, again, being overly overweighted in one particular sector as a result of run-ups and not being disciplined in rebalancing the portfolio becomes a hidden risk for clients. So constantly being in communication and in front of our clients is important, and advising them where to, reduce risk. And hopefully they take your advice and implement it as well. And generally speaking, we're happy that our clients do that.
Now, Lisa, when we spoke earlier, you mentioned, a company's most important asset are their people, you know?
Yeah.
Yes. So investing in that, training top talent, retaining top talent, what are some of the advice that you can have for companies who are looking to do that? I mean, how is the labor market now? We see that the jobs opening came out higher than expected today.
So every year we field our RIA benchmarking study, which is the leading study for the RIA space. Every year, about 75% of firms want to hire. When I project out the CAGR of the growth rates that we're seeing over the next 5 years, what I see is that we need to hire 70,000 more people for these RIA firms, and that's not taking into account any retirement, any attrition, or newly formed firms. So I think that's fairly conservative because those things are going to happen. So it's one of the areas we focus on a lot, is just providing more awareness of RIA firms, but also how can firms differentiate themselves in this crowded labor market. So I really like to see, if you have your own firm, I really like to see you think about your employee value proposition. So just like you have a value proposition for the clients you serve, taking a little bit of time to articulate why should an employee choose your firm and why should they stay there. When we consult with firms, a lot of them have some of that, but they haven't written it down. This goes beyond just comp and equity and time off and benefits. It goes into maybe you do something like you have a sabbatical every 5 years. That's what we have at Schwab. That actually attracts a huge amount of talent, and it gives us a talent reputation in the marketplace. You don't have to do that. It could be anything. It could be that you have a career path. The younger generation coming out of the university system wants to know if they're going to join your firm. You have a way to develop them, and it's been proven. So they're pretty savvy about that. They want to know that you have steps in that career ladder. It could be something like a mentorship program, and that's one of my favorite kind of free tips. If you're multi-location, if you're in different geographies, doing a very simple mentorship program, it could just be for 6 months per pair up. That can be an amazing investment in your culture, because a younger person or someone less tenured and someone more tenured have time to talk and connect. That water cooler moment might not happen otherwise. You'll both learn something from each other. You can put the impetus of setting up the meeting and the agenda on the more junior person, or you could give some sample agendas. They might meet monthly for 6 months. It's not a high pressure situation, but just saying that in your interview, I know firms that's how they won someone over. They weren't even the highest compensation package, because people want to feel like you're going to invest in them, like there's development opportunities. Some of those intangibles go way further than just your compensation. That should be, that should be competitive, and we have a whole compensation study that helps you figure out how to be competitive. But some of those intangibles really, really matter. I've seen firms in their priorities for the given year, the top 2 are usually growth related, but the talent ones have just shot up the list of priorities. So this is what everyone's thinking about, and I would also put AI training for all of us into that, leaders included. So everyone here, Absolutely. I think we all need to invest in that, because that is coming. And you want your team to feel like you're investing in them having the skills to not be replaced by AI, but to be someone who knows how to use it.
Yeah, most definitely. Halé, I want to bring a two-part question to you. Okay, so the first part is about macroeconomic indicators. How are you prioritizing those? And then the second part is which sectors, maybe asset classes, appeal to you the most? So maybe start with the first.
Sure. In terms of macroeconomic indicators, our investment professionals are watching the ISM Manufacturing Index, and they're watching the ISM Services Index, month to month, watching the movement there. That would inform supply chains, backlogs, port activity, where we need to be wary, especially with the backdrop of tariffs. In terms of sectors, we are not overweight any particular sector at this moment. We have a slight preference for materials, for financials, and healthcare. We are recommending, again, as I said earlier, that we look at, from an asset class perspective, the small and mid-cap companies more than large cap at this moment in time. So those are the areas that we're looking at. I need to put up a disclosure. This is not a recommendation. I did not bring the disclosure slide.
Now, as you start to look more toward the future, as we wrap things up, Lisa, how do you see yourself advising your clients differently, let's say 1 to 2 years from now, or maybe we should take it 5 to 10? How do you see you talking to them differently?
I do want them to stick with fundamentals, like having a good strategic business plan, having good workflow integration, having a good growth strategy. My favorite stat of all time is that firms that have an ideal client persona that's clearly defined, a client value proposition that's clearly defined, and a marketing plan that's written down get 67% more new client assets in a given year. So that's like work that if you engage in it, it will pay you off every single year. So I'm going to put that there. But the new thing, I really would like to see us all engaging in learning about AI together. We have a Teams channel that's called our BCE, Business Consulting and Education Think Tank, and we all engage in it no matter what your level is in my group. And we now have guests that come in, prompt challenges, really easy things like sharing articles, sharing feedback from clients. We've had some advisors come in and talk about how they're using it to demystify it, not make it so scary. And I think that's just the beginning, but that's a really easy way to take some of that scariness out of it that some people can feel and make it feel like we're investing in this as a skill.
All right. Thank you very much, ladies. We're going to leave it there. Thank you.